And in our top business story, the Emirates Group today announced its 27th consecutive year of profit and steady growth across the company, ending the year in a strong position despite the many global and operational challenges during this period. The financial year ending 31st March 2015 also marked the achievement of new capacity milestones at both Emirates and Donata, as the group continued to expand its global footprint and strengthen its business through strategic investments. According to its 2014-15 annual report, the Emirates Group posted a 5.5 billion dirhams profit, up 34% from last year. The group's revenue reached 96.5 billion dirhams, an increase of 10% over last year's results, and the group's cash balance remaining strong, growing to 20.0 billion dirhams. Commenting on the results at a media briefing, His Highness Sheikh Ahmed bin Saeed Al Maktoum, the chairman and chief executive of Emirates Airline and Group, stated that the fall in oil prices provided cost relief in the second half of the financial year. However, it did not offset the hit to profitability caused by significant currency fluctuations, nor the hit to revenue from operational adjustments in addressing the Ebola outbreak, armed conflicts in several regions, and the 80-day runway upgrading works at Dubai International Airport. The strong rise of the US dollar against currencies in many of Emirates and Donata's key markets had a 1.5 billion dirhams impact to the group's bottom line, while the 80-day disruption at DXB had an estimated impact of 1.7 billion dirhams on group revenue. 2014 and 15, the group collectively invested over 20.2 billion dirhams in new aircraft and equipment, modern facilities, the latest technologies, and staff initiatives. This was the second highest amount ever in one financial year after last year's record investments. Additionally, the group's employee base across its more than 80 subsidiaries and companies increased by 11% to over 84,000 strong, representing over 160 different nationalities. In line with the overall profit increase, the group declared a dividend of 2.6 billion dirhams to the Investment Corporation of Dubai. Dubai has made it to the list of top 5 most improved cities since 2010, which has been compiled by global property expert JLL in partnership with the business of Cities Group. Istanbul has been ranked the most improved city since 2010 in the Business of Cities 2015 report, followed by Moscow in Russia, Mumbai in India, and Seoul in South Korea. In terms of the most improved cities, Dubai showed marked progress, climbing up the global ranking in respect of 2 diverse indicators: financial services and innovation, both of which form an important part of the government's 2021 economic vision for the city, according to JLL. The report, which analyzes over 200 globally recognized city performance indices to understand the comparative performance of cities, also identifies New York, London, Singapore, Paris, and Hong Kong as the top 5 performing cities across 6 leading all-round indices. Among the emerging cities, Dubai, Bangalore, Sao Paulo, and San Diego all appear to have become associated globally with exciting recruitment opportunities, and while there has broadly been stability at the top of global ranking, further down has seen high levels of flux in the past 3 years as cities readjust to the geography of global opportunity. And led by Emirates Airlines, 16 companies from the UAE have made it into the list of the top 50 MENA firms in terms of brand value for 2015, as their valuation grew by nearly 1/3. The brand value of the UAE companies increased 33.5% to 93.58 billion dirhams in 2015, as compared to 70 billion dirhams in the previous, regaining the top slot from Saudi Arabia. According to world's leading brand valuation and strategy consultancy, Brand Finance, Dubai-based Emirates remained the Middle East's most valuable brand and also the world's most valuable airline brand by a considerable margin. The brand rating is calculated using Brand Finance's Brand Strength Index, which is a benchmark of a brand's power, stability, and future potential, similar to a credit rating. Led by Dubai entities, the top 5 UAE companies registering the highest brand value increase were Emaar Properties, 74%, Dubai Islamic Bank, 63%, RAK Bank, 62%, Abu Dhabi Islamic Bank, 59%, and Mashriq Bank, 56%. Other Emirati companies that made it to the list are Etisalat, Emirates NBD, DO, National Bank of Abu Dhabi, Etihad Airways, First Gulf Bank, Abu Dhabi Commercial Bank, Taqa, DP World, and Union National Bank. Except Taqa, all UAE companies saw their brand value increasing in the latest Brand Finance rating. According to Brand Finance, the total brand value for Middle East top 50 brands has increased 23% between 2014 and 2015 from 184.6 billion dirhams to 226.44 billion dirhams. This year's Arabian travel market has successfully concluded today, with delegates and exhibitors agreeing that the deals and connections made at the show will have a significant effect on trade and tourism around the world long after the event's conclusion. The growth of Dubai's aviation sector was one of the main topics of discussion at the show, which was highlighted by the expansion plans announced for Dubai World Central by Dubai Airport's chief Paul Griffiths on the sidelines of the event. And while the focus was on Dubai at this year's show ahead of hosting Expo 2020, other industry players made the most of their opportunities at the event. Dallas-Fort Worth International Airport was exhibiting at the show along with significant presence in general by the United States. The international airport is the second largest in the U.S. and is the third busiest in the world in terms of aircraft movements and ninth in terms of passenger traffic. According to representatives for the airport at ATM, the airport's continued growth and innovation in operations has seen it become a crucial gateway to the United States.
Dallas-Fort Worth Airport is one of the biggest and busiest airports in the world, and we're very fortunate that we have a lot of capacity. So we're very efficient, and we're an easy place for passengers and cargo to connect from anywhere in the world through the airport. The Middle Eastern customer is incredibly important. Emirates originally launched their service with the 777, and then just last year upgauged it to the A380, the world's largest aircraft. So they almost doubled their capacity. And we've seen traffic from the Gulf region in the last year go up 99%. So the Middle Eastern customers are incredibly important to the Dallas-Fort Worth Airport. We are noticing increases. And actually, for passengers and cargo, a lot of the Middle Eastern traffic there's Middle Eastern customers, but also people are coming from the Indian subcontinent and from Africa as well. So we find about half of the customers originate in the Gulf region, and then half are connecting from other places in the world. So the Gulf carriers are tremendously important, bringing people from all over the world to the Dallas-Fort Worth Airport.